You know, when it comes to trading, price action concepts are like a breath of fresh air. They cut through all the noise and clutter, give me a crystal clear view of what's really happening. It's like peeling back the layers of seeing the raw truth of market behavior. And that's what makes these price action concepts so powerful. They allow me to spot meaningful patterns, trends, and reversals without any distraction. It's like having a direct line to the essence of market behavior, which is pretty amazing for traders like me. Now, I won't lie, identifying these price action concepts can be a little bit tricky at first, but don't worry, I've got your back. I've done my fair share of searching and testing, and I have found some fantastic price action indicators that makes it much easier to spot these powerful signals. In this video, I'll be showing you a bunch of these indicators, from classic candlestick patterns to support and resistance zones, trend lines, chart patterns, and breakouts. I've got it all covered. By the end of this, you'll have a whole toolbox of techniques to help you make smarter trading decisions. So buckle up and get ready to take your trading game to the next level with these powerful price action concepts. Let's dive right in. The first price action concept we'll be looking at is candlestick patterns, one of the oldest and most tested patterns that are widely used by traders. If you're a beginner and you don't have any ideas about those, previously I made like an hour of video talking about all candlestick patterns. I broke them down one by one. How do they work? What is the whole concept? Don't worry, check that video and then come watch this video. But if you're familiar with the concept, there are many different types of candlestick patterns. However, there is actually an indicator that is able to combine and show us all of these patterns at once. Let's first add the indicator to the chart. Head over to the indicator search tab and search for the candlestick patterns indicator. Select the all candlestick patterns indicator by TradingView and add it to the chart. Instead of showing us one candlestick pattern, such as the doji or the engulfing candlestick, this indicator is able to show us nearly all of the candlestick patterns. So you shouldn't be just looking for them and searching them out. If we head over to the indicator setting tab and click on the inputs tab, we can see the following. Currently, the trend is detected based on a 50-period moving average. Let's remove this. Next, we can see that only a few candlestick patterns have been selected. We will change this and check only the most popular candlestick patterns. The first one we'll keep enabled is the doji candlestick. To make it short, the doji candlestick has a small body with long upper and lower wicks. It indicates market indecision, uncertainty, and a balance between buyers and sellers. It suggests potential trend reversals or periods of consolidation. The next two candlestick patterns we will be enabling are the Dragonfly and Gravestone Doji. The Dragonfly Doji is a bullish candlestick pattern that resembles a T, and the Gravestone Doji is the opposite, indicating a bearish reversal. Another important pattern we will be enabling is the engulfing candlestick, which occurs when the body of a larger candle completely engulfs the body of the previous smaller candle. The final two patterns we will be enabling are the hammer and the spinning top. The hammer is characterized by a small body, a longer wick, and little to no upper wick. On the other hand, the spinning top has a small body with upper and lower wicks of similar length. Since we won't be using other patterns, we can disable them. Now that we have added and configured the indicator, let's take a look at how we can use it. Here we can see that the price was in a bearish trend. However, during this bearish trend, we can see that a bullish engulfing candles indicate that the price may make a bullish trend reversal or a short bullish pullback. Because of this, let's enter into a buy position here. We will be placing the stop loss at the most recent swing low. For the take profit, we'll be targeting a 2 times risk to reward ratio. In this case, we can see that a large uptrend was taking place. However, at the end of the uptrend, we can see engulfing bearish candlestick, which indicates that a bearish reversal might start soon. Because of this, let's enter into a sell position here. We'll be placing the stop loss at the recent swing high for the take profit. Again, we'll be targeting at a 2x risk to reward ratio. The second price action concept we'll be looking at is support and resistance. Previously, I made a completely dedicated session and video about it. You can check it out too, especially if you are a beginner. But to make it quick here, this is one of the most important concepts to use in order to become a profitable trader. In order to help us identify these support and resistance levels, let's add an indicator to the chart. Navigate to the indicator search tab and search for the swing high and low support and resistance indicator. Select the indicator made by Patterns Smart and add it to the chart. This indicator plots dotted lines and represents swing high and swing low points that can act as both support and resistance zones. Since the settings of the indicator aren't optimal yet, let's adjust them. Navigate to the indicator setting tab and click on the input tab. We'll first be changing the swing high strength value. This refers to the number of bars to the left and right of the swing points for swing highs. If we increase the number significantly, we can clearly see this change being reflected on the chart. Since we are looking for a middle ground, we'll be changing the value to 20. Since we want the same rules to apply for swing lows, we'll also be changing the value to 20 for the swing lows. Now let's take a look at how the indicator can be used. The indicator looks at previous price action to determine that which levels will have significant amounts of buying or selling pressure, which will cause consolidation or reversals to occur. Here we can see that the price action has been in a small downtrend. We can also see that the price action is now approaching a support zone that was plotted by the indicator. The signal is strengthened by the small consolidation phase that previously was made at this level, indicating a bullish order block formation. Because of the signals, let's enter into a buy position here, aiming for a 2x risk to reward ratio, while setting the stop loss right below the support level. While analyzing the price, we can see here that the price recently made a pullback to a bearish trend line that the price has previously respected multiple times. We can see that after the pullback was made, the price respected it again and continued in the bearish direction. Along with this, if we take a look at past price action, we can see that this price level has been used as a consolidation and resistance zone before. Because of this, let's enter into a sell position here. We'll be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2x risk to reward ratio. The third price action concept we'll be looking at is trend lines. This can be hard to spot. However, by using an indicator, we can easily identify accurate trend lines. But before that, if you're looking for a crypto exchange where you can hold or day trade crypto, then check out on Bybit. They currently have some of the lowest fees along with many trading possibilities such as spot derivatives, NFTs, and even options trading. Sign up via my link down in the description to get up to plus $35,000 worth of USDT bonus along with zero maker fees for the first 30 days. Navigate to the indicator search tab and search for the trend lines indicator. Select this indicator made by Lonesome the Blue and add it to the chart. As you can see, now that we have added the indicator to the chart, we can easily identify trend lines. The indicator calculates these trend lines by finding pivot highs and lows based on if the current pivot high or low is smaller or greater than the previous pivot high or low. The trend lines are plotted. If we take a closer look, we can also see that H and L labels will sometimes be plotted on the chart. These represent the pivot highs and lows that are used for the trend line calculations. Here we can see that a bullish trend line formed which has been respected multiple times, showing that it's strong and likely to provide support in the future as well. We can see that recently a pullback was made back to the bullish trend line. After the pullback was made, the price made a clear rejection by respecting the trend line. If we take a look at the previous price action, we can also see that the price has consolidated and rejected this level before, further confirming the bullish bias. Because of all of these signals, we will enter into a position. We'll be aiming for a 2 times risk to reward ratio and placing the stop loss at the most recent swing low. The fourth price action concept we'll be looking is the chart patterns. Previously, I also made a video about that as well, which you can find the links both above here and down in the description. Chart patterns are specific formations that appear on price charts and can provide valuable insights into future price movements. Let's first add the indicator to the chart. Head over to the Indicator Search tab and search for the Wedge and Flag Finder indicator. Select the indicator made by TrendScope and add it to the chart. By using multiple pivots, this indicator is able to identify powerful chart patterns known as the wedge and flag patterns in the price action. If we head over to the Indicator Setting tab and click on the Inputs tab, we can see that the length of the wedges can be changed. This means that by changing this setting, you can change how many pivots a wedge can have. The following checkboxes are for visual changes. When the first checkbox is enabled, it will cause the indicator to try to avoid overlapping wedges while still showing nested wedges, which is a wedge within the wedge. The other checkbox is to enable or disable the zigzag lines. However, since these can be useful, we'll keep them enabled. Then final settings are for enabling or disabling different zigzags. We will be keeping these settings at default. This indicator helps us detect 3 patterns: the rising wedge, the falling wedge, and flag patterns. A rising wedge is a bearish chart pattern formed by converging trend lines with higher highs and higher lows, indicating a potential reversal. A falling wedge is a bullish pattern formed by converging trend lines that slope downwards, comprising lower swing highs and lower swing lows, with the price confined within a narrowing range. The falling wedge indicates a potential trend reversal as buying pressure may overpower selling pressure, resulting in an upward price movement. Finally, the indicator can detect flag patterns, a pause or consolidation phase that happens after a fast price move. Flags look like rectangles and can slope slightly in the opposite direction of the main trend. If a flag slopes upwards, it's called a bearish flag, and if it slopes downwards, it's called a bullish flag. Traders see flag patterns as signs that the previous trend might continue. In this case, we can first see that a rising wedge was playing out, which caused the price to make a sharp move to the downside. After the sharp move, the price consolidated, which ended up creating a bearish flag pattern, indicating that the price will move in the downward direction. However, we can also see that a falling wedge was made within this bearish flag. Despite this, the sentiment is still bearish. This is because the falling wedge was small, and after it was created, a small bullish move did indeed occur before the price headed back in the downward direction. Because of this, let's enter into a sell position here. We'll be placing the stop loss at the recent swing high, indicating by the previous pivot. For the take profit level, we'll be aimed for 2 times risk to reward ratio. The final price action concept we'll look at is breakdowns and breakouts. Breakouts or breakdowns are great signals that can trigger buying or selling interest and drive the price in the respective direction. Previously, I talked about those in my Bollinger Band session, which you can check the link both above here and down in the description. There is actually an indicator that can help identify breakouts. Let's add this indicator to the chart. Head over to the Indicator Search tab and search for the Breakout Finder indicator. Select the indicator made by Lonesome the Blue, thanks to him by the way, and add it to the chart. If we take a look at the chart now that we have plotted the indicator, we can see that the red and blue boxes are plotted on the price action. These boxes help visualizing where a breakout is likely to occur or have occurred. If we head over to the Indicator Setting tab and click on the Input tab, we can see the following. The first setting is the period, which is used to find pivot points. When we decrease this value, smaller breakouts will be detected. On the other hand, increasing the value will allow us to see longer-term and more important breakouts. Since a value of 5 is good for detecting midterm breakouts, let's keep the value of the setting at 5. We'll also be keeping the other settings at default. While analyzing the price, we can see here that the price recently made a pullback to a bearish trend line that the price has previously respected multiple times. We can see that after the pullback was made, the price respected it again and continued in the bearish direction. Along with this, if we take a look at past price action, we can see that this price level has been used as a consolidation and resistance zone before. Because of this, let's enter into a sell position here. We'll be placing the stop loss at the recent swing high. For the take profit, we'll be targeting 2 times risk to reward ratio. Here we can see the following: a significant uptrend occurred followed by a pullback and a consolidation phase. We can see that after this unfolded, a bullish breakout took place indicated by the blue arrow. Because of this, let's enter into a buy position. To manage our risk, we will be placing a stop loss below the lower line of the breakout box. For the take profit level, we will aim for a 2-to-1 risk to reward ratio. That's all about it for this video today, but it's not going to be profitable without the proper risk management, which I talked in the beginning of the video. And here's my surprise for you. Previously, I made almost an hour of video clearly about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do. This is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfectly. I hope you enjoyed this video. If you did, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment. And also please share this video with your friends who are keen to know all about this unknown world of trading, especially about technical analysis. Happy tradings!